setting up your presentation and focusing on loss ratio and requoting them with their previous company. Now we're going to talk about the details and the reason and the purpose why we actually introduce a loss ratio and we requote them right away. Now the purpose of this is simply to eliminate their options of going back to their previous company, to eliminate the monthly payment that they were paying before, to educate them on the loss ratio, to educate them on the reason why insurance companies increase their rates and why the rates are never the same, the reason why rates fluctuate. And also to introduce the option that their previous company would offer if they were to go back with their previous company. So number one, for the following situation, explain the loss ratio and requote them with their previous company. So no insurance, they don't have insurance at this point. They had insurance at one point. So your goal is to educate them on the fact that since their policy is canceled, the insurance companies are going to recalculate, readjust, and re-quote them to determine what they qualify today. So the rates that they had before were technically the rates that they qualified for back in 2016, 17, 18, whenever they actually purchased the policy. You're also going to determine within this section, you're going to qualify and determine if they're making any changes, are they adding any vehicles, are they adding any coverages, adding any drivers. You have to determine if the information matches, because that information you're going to use to your benefit. Also, determine if they've been involved in an accident, have they gotten pulled over, have they received the ticket. Determine if there's any changes from the previous situation with today's situation. Number two, you're going to introduce the loss ratio. You're going to sell the idea that the rates fluctuate not based on us, the consumer or the customer, based on the insurance companies. You're going to sell the idea that companies are going to increase their rates to try to balance their losses before they go bankrupt. So you're going to educate them that if companies are paying money out of pocket, thousands of dollars, unless they collect those thousands of dollars, they're going to lose a lot of money. They're not going to be profitable, and eventually they may go bankrupt. So it's very important for customers to understand that insurance companies potentially lose a lot of money simply because their monthly payments could be $100, $200, but in case of an accident, the insurance companies are paying thousands of dollars. So you need to educate them on the whole concept of the loss ratio. Use all the scenarios within the loss ratio to educate them, to convince them that companies have no other choice but to increase the rates. And the only way that they could actually maintain the rate that they had at one point is by not letting the policy cancel. Number three, you're going to have to requote them with their previous company. Now you're going to introduce the rate that their previous company is offering today. You're going to let them know that due to the loss ratio, the insurance company that they had before is no longer able to offer the same quote. So for instance, if their monthly payment was $70 a month, after doing the loss ratio, you're going to tell them, look, unfortunately, your company, let's assume that it's Infinity. Your company, which is Infinity, is no longer offering those $70 a month. Now, running the information Infinity based on today's rate, they're actually offering $120. Now, that's a big difference. They're no longer able to keep you with the $70 a month. Once again, the reason why they do this is simply because they're losing a lot of money. So they balance their losses by increasing the rates. And you're only affected if your policy cancels. So by offering the requoted option, you're eliminating the option or just the thought of them returning back to the agency, because you're going to introduce your price after. And most likely the option that you're going to introduce is going to be a little bit higher than those $70 that they were paying before. So you don't want them to tell you, well, let me go back to my previous company, let me shop around, or let me think about it. You need to educate them You need to eliminate the $70 a month. You need to plant the seed that the options that they had before are no longer available due to the losses, due to the loss ratio. So by the time you start introducing the option, at least they're going to be open to considering the option. Number 4, after introducing the requoted option, you're going to continue to emphasize on them not having to continue shopping around, or that there's no benefit of them going back to their agency or the company that they had before, simply because we have those companies available. And matter of fact, you gave them a quote with their previous company. So therefore, you are selling the idea that we have all the options. We could requote with any company. We're able to determine what rates every company is offering today. And then by the time you give them your options, at least they're going to be a little bit more positive. They'll be willing to listen. They'll be willing to consider the options that you're going to offer. So number 5, it's going to be introducing the approximate of the monthly payment that we have. So just assuming that the monthly payment is $90, we're going to give them $80 to $90 a month. So the fact that you introduced the loss ratio and you requoted them, now you can actually calculate savings, because you're going to calculate the 120 that Infinity is going to offer, not the 70. 70 is no longer available. You already educated the customer and you eliminated the $70 a month. Now you're calculating 120 with the $80 to $90. So even if you give them the exact monthly payment of $90, so that would probably be step number 6 or 7. If you introduce a $90 a month, now you're going to tell them, look, even though it's a little bit more than what you were paying before, don't forget, based on the loss ratio, those $70 are no longer available. Matter of fact, let's be realistic. Let's calculate the actual realistic price. They're going to offer you, Infinity is going to offer you 120. So 120 minus the 90, I'm still able to save you $30 a month. So $30 a month is still a lot of money. $30, that's money that you can use towards another payment. $30 times 12, that's a good $400 of savings. Sell the idea that no one else is saving as much money as them. Matter of fact, everyone's saving $100, $200 a month, and that's pretty much it. Everyone is saving a lower amount, so they should be happy, they should be satisfied, they should be motivated to make a decision simply because the rates that we're offering are lower than the rates that their previous company offered. So once again, the purpose of introducing the loss ratio and then requoting them with their previous company is to add value to the options that you're going to offer, to justify that the options that you're going to offer, even though they're going to be a little bit higher than their previous payment, the previous payment is no longer available, so you're eliminating that mentality. You're also requoting them with their previous company to eliminate them wanting to leave, to go back to their agency, to shop around. So loss ratio and requoting is mandatory for every single customer that does not have insurance and for every single customer that had insurance at one point. Now, it doesn't really matter if they had insurance 5 days ago, 30 days, last month, last year. It doesn't really matter. You're still going to follow the same formula simply because customers are always going to compare what they used to pay with the option that you're offering. So even if they had insurance last year and they were paying $30 a month, and the lowest option that we have today is $80 to $90, they're going to keep the $30 in perspective, and they're going to tell you, well, let me continue shopping around because I know I was paying $30 a month. I know I could find something lower. So if you introduce the loss ratio, you sell them on the loss ratio concept, and you requote them with their previous company, you're eliminating those $30 a month, so they may not bring them up as much because you educated them on the loss ratio, you eliminated the $30 a month, you justified, you educated them on the concept that companies are not going to offer the same payment all the time. So by the time you give them the new monthly payment or the monthly payment that we have, which is a lot higher than the 30, they're going to be willing to consider it. They're going to be willing to listen simply because you educated them. So make sure to follow loss ratio and requoting with their previous company for every single customer that does not have insurance.